Mm. All right. Midweek update time. I'm going to do a little bit of review first just to catch us on and so we don't get lost. Okay, because this review is going to make the picture much more simpler for us for Thursday and Friday. Okay? So, review time. Now, as most of you know, the range that was of importance to us was given to us by the 4-hour time frame about 3 to 4 weeks ago. And it's in gray here. The upper end is at 75.40 and we have the lower end at 73.54. Okay? After the market broke an important level, okay? I don't want to jump too far back, okay? Because it doesn't matter. But, defending this area, it led the markets into the upper end of the 4-hour range, which is at 75.40. Now, coming into the upper end at this range, the market is set with two scenarios. Number one, if it wants to keep pushing any higher, the market needs to trigger a break out of the range. Okay? And that overall sets off a trending move. Number two, if the market fails to break out higher, or if the market, attempts a breakout but fails to hold, the market is going to remain in a consolidation mode. If it's unable to get above 75.40, or if it fails to hold above 75.40 on a breakout attempt, we watch for the potential scenario of the market re-entering this range and just consolidating inside of it. Okay? So, on May 25th, one of my take profits hit. I am long at 72.50. Wow. Nice. I put that up in that Discord. So that's cool. Got 15 points there. All right. Anyways, yeah, so the market broke May 24th, the market broke above 75.40. Okay, and since getting above 75.40 for 2 weeks, the market attempted to establish value above this range. Okay, which is good to see for bulls. We want to establish value in a form of consolidating above the breakout level, and then we want to see follow through. All right. But last Friday's session, the market failed to hold above 75.40. And as I advised on the Substack newsletter, the only downside scenario that is in play and to be cautious of is if the market slips back under 75.40. Because slipping back under 75.40, it places the market to potentially trade back inside of the 4-hour range. And potentially trading back inside of this 4-hour range, the maximum risk on the downside is the lower end of the 4-hour range. So what that means is, don't get caught holding long if the market fails to hold above 75.40, because it can make a full round trip back into the lower end. And that's what the market did in one session. Okay? And coming into this week, my immediate focus was sets at this lower end of the 4-hour range, which is 73.54. It's now updated to 73.55. Okay, so into this week, my outlook was set like, hey, if we can hold the lower end of this 4-hour range, okay, it is possible the market can enter a consolidation mode. Now, that consolidation mode, first off, after this failure and making a full round trip into the lower end, there's two things that I want to make clear. Is this remains the lower end, but the failure of holding above 75.40, this expanded our range, okay, from 76.32 into 73.55. I talked about that in the newsletter. Okay, and number two, coming into the lower end, this was our focus. Can the market hold above 73.55? And in doing so, we want to see the market enter a consolidation mode inside of the new range from 73.55 into 76.32. And we want to see if a consolidation mode can set off. Okay. So we saw some buying at this lower end Sunday into Monday. I advised on that. Tuesday session, bulls dropped the ball on some intraday supports, which put an immediate test into the lower end of the 4-hour range, and sellers broke it down. But within the same session on Tuesday, bulls recovered the lower end once again. So into Wednesday's session, once again, I talked about that we want to maintain above 73.55, because in doing so, it keeps the market trading in this gray range right here. Now, of course, we lost it into Wednesday's cash session. We came up intraday, but failed to hold. And the failure to hold above 73.55, as I explained to readers, the downside risk is putting a full retest at Tuesday's low. Okay, and that's what happened. We failed to hold above 73.55, and that set off a full round trip back into Tuesday's low. Okay, and this is where we pick up at. So, Tuesday's low. All right, so first off, the first level of interest into Thursday is Tuesday's low at 72.47. Okay, and why is it a level of interest? It's a level of interest because if sellers want to see the market go lower, they got to break down the market under 72.47. Okay, that's the level they're looking at. Now, so far in this evening session, sellers have spiked under 72.47, and bulls have pushed the market back over 72.47, which was a long entry that I took just about an hour ago or something. Okay, but that's what makes Tuesday's low very important, or the first level of focus is 72.47. Okay, if sellers want to break the market down further, they got to break down 72.47. Okay, but this is where it gets a little tricky. I'm not too much of a big short guy. I mean, because they don't really last too long. It sells, but especially in a market like this where the primary trend is just it's better to stick with the trend until the very end. Okay, so here we go. But here's the thing. Okay, under 72.47, we have right here highlighted in gray is the upper end of a prior 4-hour range. Okay, and it's made up from this upper pivot where my pointer is at as 71.83 and 72.23. Getting under 72.47 places this area in play. And just because it's a prior breakout area, that makes it an area of interest for buyers. Okay, so it makes it tricky and it makes it tough, especially if you're trying to look for a breakdown trade. Because man, these areas just squeeze you. I had 7,300 sets. I advised about it on Tuesday. Okay, and the only reason I advised about it was because, like, where my pointer's at, it's a prior breakout area on the 4-hour time frame. And what happened on Tuesday? Tuesday we lost 73.55. It led us to this prior breakout area. Sellers looked under it, and bulls quickly set off a trap. Such a big squeeze. What is it? It's almost 100-point squeeze. Crazy, And it's the same thing here. If we break down under Tuesday's low, we're looking at a prior breakout area. Okay, it's tough. All right. This was the prior 4-hour range here. We had it from 72.23 down into 70.77. So yeah, area of interest. It's tough. As a buyer here, I am watching to see if the market can continue to hold above 72.47. Okay. In the best case scenario that it does, we're looking for a shot back up to 7,300. And above 7,300, we can possibly set up for a retest at 73.55. Okay, and to really set a definite bottom, we still want to see the market back above 73.55. Okay, that's the ultimate bullish case scenario that we want to see. Okay, but if the market fails to hold above 72.47, this is going to put, like I said, the upper end of this prior breakout area. Okay, and that's where I would have my eyes set on as well. Just make sure you're managing risk. And we want to see the same thing that happened at 7,300 happen here at 72.23. And what that means is we want to see the market spike under 72.23 and reclaim back quickly. That would be a great long entry. All right, so yeah, I'm watching these two areas into tomorrow, okay, which is going to be 72.47, 72.23. All right, so now an area, something I want to go over quickly as well is, if you guys went over the Sunday's video, when we're looking at the market from a daily time frame perspective, the market was stuck from 70.77 down into the lows of 63.53. This was the bigger range we were working with. Okay, from up here down to down here. Now, of course, we trapped the weekly pivots. Okay. And from trapping this weekly pivots, it swung the market into the upper end of this daily time frame range. And it's just what I talked about earlier with the 4-hour time frame range. Okay, coming into the upper end of this daily time frame range, the market is set with two scenarios. It's either you break out or you remain in a bigger consolidation. And what did the market do in early April. The market broke out. Okay? And since this is the daily time frame range, you know, these breakout triggers are much more powerful than a 15-minute time frame, than a 5-minute time frame, than a 1-hour time frame, even than a 4-hour time frame. The higher you go on time frame, the more significant these pivots are going to be. Okay, so coming into the upper end of this daily time frame range, the market broke out, right? Now, what we saw in the 4-hour time frame is that, we already have a range in play. The 73.54 is the 4-hour time frame lower pivot, okay? And the upper pivot is 76.32. It's this gray area here. Now, so far into this week, we have lost this range. Bulls fell to hold the market inside of here. Okay, and as of right now, the markets has slipped out and is hanging underneath this 4-hour range. All right, and as I mentioned, the best case scenario into tomorrow, okay, is we want to take a look at Tuesday's low. It's the first level of interest for us. Okay, and so far the market has spiked underneath, and bulls have reclaimed the market back over. It doesn't mean anything. The session is like, there's a whole day left, So, but this, this is an important level for us. Because like I mentioned, if sellers want to break the market down further, they got to break down Tuesday's low. All right, but if we can maintain above Tuesday's low, this gives bulls a shot to retest, keyword, retest the lower end of the 4-hour range, and to set a bottom. To set a bottom, the market needs to get back inside of this range. Okay? And in doing so, that would just place the market in a consolidation. Okay? It'll be a short-term bottom. All right, but here's the thing. If sellers do break the market down further under Tuesday's low, guess what comes into play? This is our home base area. This is the main breakout area on the daily time frame. Okay, we broke out and the market rallied like 600 freaking points. Okay. If the market looks under Tuesday's low and sellers can follow through, we come right back to home base, baby. And this is an area I am highly interested at. It would be an absolute gift. Okay. So, into Thursday, that's what we're watching. Okay. Let's keep that focus on 72.47. If we can hold above it, okay, let's see if we can set off a retest at 73.54. Okay, and remember to retest. Let's say we do come into 73.54. To set a short-term bottom, we need to get back above, and in doing so, it places the market to trade inside of our 4-hour range. If sellers break down Tuesday's low, it's all right. We're cool. Let them have their little short-lived fun. They've been getting massacred since 63.53. It's more than 1,000 points. Let them have it. Because this is going to place our home base back into play. Okay, and it's a retest area. Okay, broke out here. Boom, boom, boom. This is it'd be a nice area. All right, so let's keep an eye on that. All right, and that's what we're looking at. So Pretty straightforward, right? Very straightforward. Hold above that Tuesday low. Look to get here. Best case scenario, we retest it. And if we do come into 73.55, don't chase the market there. The long entry was fired off on this trap here. Okay. If it comes into play, you should already be trimming profits by a lot, because you never know what if sellers just hit this area hard, and so, yeah. We lose 72.47. We stay on the sidelines and we wait for our home base. Easy money.